Make sure you guys get your 5 stocks from Moomoo. Link down below. All you have to do is deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. It's free money, guys. Again, link down below. And now, let's talk about the stock market, some stocks in general, earnings that are coming up, and we're going to cover a little bit about Russia, Ukraine, some news that came out this weekend. So if you all find value, hit the like button, subscribe. Let me know your thoughts, as always, down below in the comments, and let's get right into the video. So before we even talk about Russia, Ukraine, earnings, individual stocks, let's take a look at what the markets have been doing these past couple of days / weeks. And you guys know, so there's not much to talk about unless you've been living under a rock. You should know the markets have been crazy volatile, and just in the past 2 days alone, SPY has gone from 410 to about 439, 440, meaning it rallied 7% in 2 days, and that's after it dumped even more than 7%. If you guys take a look, SPY went from 457 down to about 410 in a couple of days, right? That was a 10% drop. So the markets are very, very volatile. We're up one day, down the next. The VIX is up a ton one day, down a bunch the next. And you guys can see the VIX on Friday was down about 9%. And what you're also noticing, which I've mentioned before, but if you guys missed it, I'll mention it again. SPY is right by the 180 moving average resistance on this 4-hour time frame, and that's very important considering this point has been resistance for freaking weeks on this ETF, which tracks the S&P 500. And it seems like once 2022, the year started, we hit that all-time high, and the markets have been downhill ever since that point. So once that new year, the new page turned, right, the markets have been getting slaughtered ever since, and I'm not convinced whatsoever, guys, that SPY is going to break out of the 180 SMA quite yet until it actually does it, which is why I have my alert at $445 a share. And again, this point's been resistance, so be very careful when it comes to SPY at this point. And same thing with Triple Q, which tracks the NASDAQ 100. You guys can see this thing is down a bunch over the past couple of months. It was down about 22% at its worst point, and this actually started selling off way before the start of the new year. This started selling off when was this? The end of November. It hit 408 and it got down, like I said, it's gone down about 22% and just hit 317 in this prior week. And in the past 2 days of trading, Thursday, Friday, Triple Q has gone up. Remember, SPY went up about 6-7%. Triple Q went up almost 9%. So this is insanely volatile, like I said. And just like SPY, this is right by the 180 moving average on the 4-hour chart, which has been a resistance point throughout this whole sell-off for the most part, which, again, the sell-off started to occur in the end of November. So it's pretty much been, November, December, January, February, 3 months straight of the Triple Q getting destroyed, and SPY, it's been about 2 months. So that's a quick breakdown when it comes to the overall, indexes, what's going on, what's been going on, and kind of some thoughts there heading into this week. And we also got some news from Russia. Well, not from Russia. It's about Russia in terms of new sanctions, what's going on with SWIFT, which we're going to talk about right now. So the White House, along with the European Commission, France, Germany, Italy, and the United Kingdom and Canada, announced Saturday evening that they will expel certain Russian banks from SWIFT, the high-security network that connects thousands of financial institutions around the world, pledging to, quote, collectively ensure that this war is a strategic failure for Putin, end quote. So that's what's going on. They're getting, some of these banks are being expelled by SWIFT. And, one thing worth mentioning is Russia, this is going to hurt their economy, no doubt about it. I mean, their stock market over there is getting destroyed. But one thing worth mentioning is, and I've been doing a little research and, reading throughout the weekend, they have a lot of gold reserves. So they've actually been preparing, from what I've been seeing, right? They've been preparing for these heavy sanctions, certain banks getting kicked off of SWIFT, right? So they have about 100, I don't want to misquote the number, but they have billions of dollars in gold reserves, which is not going to help them in the long term. But I guess right now, it's better than nothing, right? And I heard they're burning, 20 billion, 25 billion a day during this whole invasion. So maybe those reserves aren't going to be that great, but they do have a good amount of gold. And like I said, the economy is getting destroyed over there right now, which you guys know it doesn't take a rocket scientist to be able to see that. And another quote here, this will ensure that these banks are disconnected from the international financial system and harm their ability to operate globally, which again is going to hurt the economy in a major way. They're also pledging restrictive measures that will prevent the Russian central bank from deploying its international reserves in ways that undermine the impact of our sanctions. So yeah, I mean, that's a little bit of news that came out in terms of SWIFT, Russia, the economy, a little insight on their gold reserves. I think the number was about 130, maybe 150 billion in gold reserves, something like that. So we're going to see, as this is obviously an ongoing event, we're going to see how this plays out over the next couple of days. And it's currently only 3:17 p.m. on the East Coast. The futures do open up in about, a little less than 3 hours. So we don't know how the futures market is going to be looking like, but it really could go either way. I have a feeling, I don't know, I could be wrong, just a hunch, but I have a feeling unless anything crazy happens in terms of Russia, maybe they go even harder now, who knows? Maybe if they back down, if they slowly back down, or I doubt that's going to happen, but we might see a little rally. We'll see. I mean, we'll see what the futures market looks like for whatever that's worth. We all know it flip-flops all the time, but we're still going to look at it. And, of course, if you're watching this video, the Marcus futures market is open, so drop me a comment. Let me know what that's looking like. So those are some thoughts on Russia, gold, Ukraine, what's going on a little bit. And now let's talk a little bit about individual stocks. We have a lot of companies reporting this week. Not so many. Well, I guess we do have some big companies, but nothing in terms of huge mega cap tech. But we do have some big companies reporting and some important companies that we really have to be paying attention to. So number one is Domino's Pizza. I don't know if this is the most important one to pay attention to, but nonetheless, I still am paying attention to it, considering last week PZZA reported, and I forget, was there I've been seeing so many reports, guys. I forget what happened with some of these stocks. Oh, yeah, that's right. Papa John's got destroyed. It went down to about $80 a share, which is nuts. Now it's trading at $107 after earnings. And let's see what they did very quickly. They did 75 cents versus 71. Looks like they double beat, sales beat as well. So nice double beat for Papa John's. So if this ends up maybe being a foreshadowing event for Domino's earnings, which a lot of these companies, they're not exactly the same. I mean, they do sell pizza. I mean, that's a very similar thing that they do sell. But a lot of these, like Costco and Target, Domino's and pizza, Papa John's, you look at the other competitors' earnings to see, okay, how is maybe this stock going to end up panning out, or this company, right? In this case, Domino's, since they haven't yet reported, and it seems like this stock has been ripping since Papa John's reported. If you guys take a look here and I show you this 5-day chart, actually, wait a second. Did Papa John's report on Thursday? Probably, yeah. So it seems like Domino's got hit on Thursday as well, and as it recovered, Papa John's recovered, Domino's recovered, and it had a huge green day on Friday as well, up 3%. So it really depends on these earnings, guys. Earnings are coming out on, let's see here, the 1st. So what is that? 2 days from now. That's on what? Tuesday. So Domino's on Tuesday. As you all can see, it got a bit oversold. Now we're rallying. We're right by the 50 moving average. If we get ourselves back in this channel, you guys can see on the yearly chart, which if we do break, let's say 440, 445 and that 50 moving average on the 4-hour chart, that means we probably would be back. I mean, we would be back in that channel. If we start getting above these points, this could see a huge rally, mid-high 400s. That's what this chart is telling me. And mind you, the 180 SMA on this 4-hour chart is at about 490. So that's where this could be going. Ticker symbol DPZ. And again, go check a look. Go take a look at Papa John's earnings to get a little bit more insight of what to expect potentially with Domino's. The next one here, which I've been telling myself I have to do more research on, is Dutch Bros. This came out, I believe it became public rather, just a couple of months ago, not too long ago at all. What was it? Yeah, in September, it seems like they went public. The stock initially hit $32. I think it sold off initially, and then it ended up rallying all the way to about $81 a share. You guys can see that. And since that $81 hit in the beginning of November, they reported earnings, and the stock's been downhill ever since, and it's been trying to break out, but it's been failing, to be honest, based on this chart. You guys can see it did try breaking out. I mean, it did break out of the moving averages early February, but then recently, during the whole Russia-Ukraine market volatility sell-off, the extended sell-off that we've been seeing, it got the stock back under the moving averages here on the 4-hour chart. And even on Friday, when the markets did very well, Dutch Bros still went down. Dutch Bros went down about 3%. So they report earnings on Tuesday. I'm going to set my alert at about let's put it at $52 a share. Mark is at or above. If that point breaks, hey, this might start rallying, because although we are in an overall downtrend right now, we're actually fighting to make higher lows as well. So I guess this could be a wedge. I mean, it is kind of a wedge. We hit a low at about, $39 in the end of January. Now we just hit another one at $42 just a couple of days ago, so that is a higher low. Now, again, if we take these moving averages out, we break the resistance of the wedge, this might get hot. This might be going back to the 60, maybe even higher, the $60 level. So watch out for Dutch Bros this week. CRM is another one. Salesforce, they were up 1.8% on Friday, and just in the past 2 days, this thing has rallied from 180 to about 208, 209, so about a 15% rally in those 2 days. And we have CRM reporting, let's see here, on Tuesday as well. So the first three that we've talked about, they're all on Tuesday. And one thing that's very prominent, it's obvious to see this, CRM is in a directional downtrend. It's been in one since the middle of November. So essentially, when Triple Q started downtrending, that same day, CRM and a lot of other tech stocks for that matter, some were getting hit even before that. But CRM being a bigger company, it actually did well throughout the end of 21. And then once the overall Triple Q started getting hit, this thing started to get destroyed from 311 down to about 180, like I said, with earnings coming up on Tuesday. And this 4-hour chart, although it doesn't look great, the 3-year chart does look pretty decent in my opinion. The 3-year chart, you guys can see, again, 311, we hit that all-time high, and we pretty much went straight up throughout that whole run. I mean, we barely saw any pullback. So in my opinion, this sell-off, this correction, or shall I say this bear market, as the stock is down about 35% from all-time highs, this was pretty healthy. And now we're seeing some buyers, a green candle forming above this 180 moving average on this 3-year chart. So that's a pretty good sign. That's showing some strength. Now let's see if that strength could continue to the point where we start breaking out on this 4-hour chart, which again, we're not doing that quite yet. So that's CRM. The next one we have here is Snowflake, ticker symbol SNOW. And like the other ones we've mentioned, most of them, right? This one's downtrending as well. It's downtrending. It's under the moving averages. We've seen a death cross for the past couple of weeks, months. It's not looking good. And they report earnings here on Wednesday, the 2nd of March. And if we take a look, we are seeing two distinct bottoms for Snowflake. One is at, let's see here, 250. Actually, it's a little bit under that, about 235. And notice we held 235 again this past week during the massive sell-off. We bounced off 235. That's when we had that 2-day rally in the markets that we talked about. So is this a double bottom forming on Snowflake? That's kind of what I'm thinking. I'm not convinced yet because, again, we're under the moving averages still. But if we start breaking out of, let's say, 290 into the 300s, which is possible. We've seen Snowflake go crazy during earnings season many times. I mean, it happens a lot. If we do break out of, let's say, 300, this double bottom breakout is going to be in play. So we really have to watch out for that. I just put my alert at $300 per share. And again, it's showing some strength at around 235. The fact that we didn't take that low out, we didn't hit a lower low, the fact that we held that, buyer stepped in, that's showing some strength. I mean, that's a good sign. So let's see if this could end up continuing here. So that's Snowflake. We also have ChargePoint, which admittedly, guys, it's funny. I talk about a lot of stocks on my YouTube channel. ChargePoint is one that I talked about a lot, and now I forgot about it recently, and now I saw it's reporting earnings this week, and I'm like, oh my God, I forgot about ChargePoint. Let's see what this thing's been up to. CHPT, wow, it hit $11 a share. That goes to show that I forgot about it because I didn't even realize it hit $11 a share. Now it's back to about 13. So this one reports on Wednesday as well, the 2nd of March. And if I show you all this chart, it's been in a straight downtrend since, let's see here, 1 year ago, pretty much, early March of 2021. Even before that, honestly, it hit its all-time high in the end of 2020. So all of 21 it downtrended. Now in the beginning of 22, it's been downtrending, and we just hit a low point. I mean, we have been at a low point the past roughly month here on this 3-year chart. So are we getting ready if this pattern continues or repeats itself? Let me show you guys this channel here that we're in now. If this repeats itself, are we getting ready? And that's pretty ugly there, but I think you guys get the point. Are we getting ready for another rally? Is this thing getting ready to push for maybe low 10s where it is now, $10, $11, $12 a share, 13? Is it getting ready for a move maybe back towards 20, 25? That could happen. That could happen if earnings are strong. Maybe we get a relief rally in the markets in general, which who knows what's going to happen with the overall markets. But sometimes these individual stocks they're detached from the overall market, and ChargePoint being about, let me see here, a $4.5 billion market cap. This could even rally on a good earnings report, maybe some good news, regardless of what the markets are doing. It's such a small company, it can do that regardless of what the markets are doing. So I'm going to be watching this. I'm also kind of noticing, is that a bullish divergence? Yeah, I'm seeing a bit of a bullish divergence on this 4-hour chart as well. So I'm going to put my alert at, let's just do $14. Nice round number, $14, and we'll see what that does at that point during this week. We also have BBY this week, which is Best Buy, and like the other stocks, this has also been downtrending the past couple of weeks. It's gone down from $140. That's actually about 3 months ago. In November, it was at $140, and it just hit $82 this past week, meaning it's well in a bear market. It is down over 40%, which is unbelievable, with earnings coming up on the 3rd, which is on Thursday, and that's Thursday pre-market. So make sure you guys make a note of that. So let's see these charts here, guys. 4-hour, like I said, we're well in a downtrend. We have seen a nice rally off the $82 low. Now we're at $95, but we are right by these moving averages, so I'm scared that this could be a bull trap. That's number one. And if we pull back to the yearly chart looks kind of like a lopsided, doesn't it look like a lopsided head and shoulders? Let's see this 3-year chart. 3-year chart looks okay. I mean, this looks like we consolidated from August 20 to about just literally 3-4 months ago. October 21, we consolidated for a good year and a half. We got that blow off top rally to 141. Now we're back towards the 180 moving average. So maybe we get some buyers around $80, $90, $100 a share, right where we are here on this 3-year chart, right by the moving average. That could easily happen with earnings again coming up later this week on Thursday morning. So that is BBY. Watch out for a breakout, let's say above $100. I'll put my alert there before we go on to the next stock. The next stock is going to be Costco. We have Costco and Target this week. We might as well just bunch these up. Costco is on the 3rd, which is on Thursday, and Target might be earlier, actually. Let me see. Target's on Tuesday. So Target Tuesday, Costco's on Thursday, and there's one distinct difference here with Target and Costco. Well, I guess there's a couple, but the main one is the fact that Target's been selling off like crazy. Target went down about 35% from 275 to 180, while Costco didn't go down nearly that much. It went down from 570. Now it's trading at 517. Costco's only down 8% right now, and from top to bottom, it got down about 17%. So the main difference is Costco's holding up. The chart looks pretty good. If we break this 180 SMA at 520, this could fly, while Target, the chart looks like crap. It's in a downtrend. It's down 30+%. The rally that we saw easily could be a bull trap, and it doesn't seem like it wants to break out whatsoever. So that's the big difference between these two, and Costco looks like it's holding the uptrend. I mean, it is. We're hitting higher lows, and we're holding those. Now we just got to break out of this little downtrend that it's been in for the past roughly 2 months, pretty much the entire 2022 year here. So let me show you this. Look at this wedge. I mean, it's clear as day. If we end up breaking out of right where we are, 520, 525, this could end up ripping with earnings coming up on Thursday. So we got to watch Costco and Target. We also have to look at SoFi, which I mentioned in my previous video, or actually maybe 2 videos ago, we talked about SoFi. They report earnings on, let me double check, is that on Tuesday? Yup, they report on Tuesday, and this one's well in a downtrend. And I mentioned to you guys, I don't want to touch it until it starts breaking, let's say, 11, 12 bucks at least, and preferably above 13. So I'm going to put 2 alerts on this. I'll put one at $13 a share. I'll put another one at about $12. We'll see. Actually, maybe $11. Let's see if we can do 11. Mark is at or above. So that's SoFi. If we break 11, we probably could fill the gap to about 12.50 to 13 in, the anticipation of earnings, maybe in a hype rally on, let's see, our Tuesday's earnings after hours. This could easily rally Monday, Tuesday from 11 to 13. So that's why I have my one alert at 11. And again, 13 is for the overall downtrend to break. If 13 breaks, that's where a real reversal could start to occur. And we also have Marvell this week, MRVL. Marvell, we have a head and shoulders on this 4-hour chart. You guys can see left shoulder, head, right shoulder. I have my alert at 78 bucks, which is $10 higher from where the stock is right now. So that it's going to take a while for it to get there probably. But overall, if Marvell breaks out of the neckline of this head and shoulders, we really could start seeing some upside movement, maybe from, $78, $80, maybe towards 85, 90, maybe even higher than that. And they actually report earnings this week as well. All of these companies that we talked about today report earnings this week. Marvell, they report on Thursday, the 3rd of March. So that's pretty much it. We broke down the markets, talked a little bit about Russia, my thoughts there, and we talked about a bunch of stocks. Let me know your thoughts in the comments. Hit the like button, subscribe, join my Patreon if you guys want all my moves in the markets. That's linked down below. And you could also get 5 stocks from Moo. All you have to do is deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. That's also linked down below. I'll catch you guys in the next video. Peace out.